Winthrop. Valentine.
Hey, how'd you make out today?
How could you do this to us after everything we've done for you?
Oh, see, I made Louis a bet here. Louis bet me that we couldn't both get rich and put you on the poorhouse at the same time. He didn't think we could do it. I won.
I lost. $1.
Thank you, Louis.
After you.
Certainly.
Margin call, gentlemen. Oh, you can't expect us to...
You know the rules of the exchange, Mr. Duke. All accounts to be settled at the end of the day's trading, without exception.
You know perfectly well we don't have $394 million in cash.
I'm sorry, boys. Put the Duke brothers' seats on the exchange up for sale at once. Seize all assets of Duke and Duke Commodities Brokers, as well as all personal holdings of Randolph and Mortimer Duke.
My God. We're ruined.
This is an outrage. I demand an investigation. You can't sell our seats. A Duke has been sitting on this exchange since it was founded. We founded this exchange. It's ours. It belongs to us.
My God.
Mortimer, your brother's not well. We better call an ambulance.
Fuck him. Now you listen to me. I want trading reopened right now. Get those brokers back in here. Turn those machines back on. Turn those machines back on. You and your Nobel Prize. You idiot.
Where's Beeks? Where in the hell is Beeks?
Beeks.
Yeah, I forgot all about that guy.
Okay, one male gorilla.
Hey, wait a minute. There's two of them in that cage.
One gorilla, two gorillas. Big deal. The whole bunch is getting sent back to Africa. It's a big scientific experiment. What do I know? Anyway, take a look. They're in love.
What should we do about lunch? The lobster or the cracked crab?
What do you think?
Can't we have both?
Why not? Dimitri, sir, lobster and cracked crab for everyone.
Extra primo good, Mr. Coleman, sir.
Looking good, Billy Ray!
Feeling good, Louis.
I love Trading Places, one of my favorite films of all time. Maybe it is yours too, listener. Eddie Murphy, Dan Aykroyd, the amazing Jamie Lee Curtis. Sensational film, so funny. And as the Caribbean steel drums fade away, let me just tell you what that was all about. It was the ending of the movie Trading Places, 1983. I cannot believe it. 34 years. Oh my God. Oh, it's incredible. And you saw how the Duke brothers, who have gone into trading parlance, whenever you talk about the Dukes, you just know what you're talking about. How they had a bet for $1 that they could turn the dirtiest, scruffiest street ragamuffin into a successful commodity trader. And then, of course, when they had, quote, proved, unquote, that they could do it, they let the guy go. And in the process, they turned their Ivy League prep school guy, Dan Aykroyd, they shoved him into the litter bin, ruined his career, and that was their $1 bet. So, Valentine, Eddie Murphy, and Winthrop, Dan Aykroyd, they met up and they did a bet, well, not really, for $1, that they could get rich on the same day that they put the Dukes, who basically had set up the Chicago Stock Exchange hundreds of years before the Dukes family, into the poorhouse. And brilliant movie, so funny. Listener, good morning, good evening, good afternoon. Welcome to the Booms and Bust Show. The film very much took place in the Chicago Futures and Commodities Exchange. Anyone who's seen the film, and if you haven't, why the hell not? You need to see this film. And if you've seen it 10 times, then see it another 10 times, because it's still ridiculously funny. In the exchange, you see, I don't know, hundreds of traders buying and selling, shouting out their trades. You won't hear that now. There is not a single person on the floor. It's all computers now. I wonder what they even do at the building. Has it been turned into a museum? Is it flats? Is it some massive palace for someone now? It's certainly not a lot to do with trading anymore. And I'm reminded of the sequence when the Duke brothers are teaching Valentine about commodities. And they say, now Valentine, commodities include orange juice, ham, eggs, just like you have for breakfast. And Eddie Murphy looks straight at the camera with zero expression. AKA, what the hell? Probably, and you know, I'm not a massive movie buff, but I'm a bit of a movie buff. It's probably the only film ever about the commodities market. So, unique in that sense. Talking about movies and pampered movie stars, buongiorno, Senor Firth. Colin Firth. Colin Firth, the archetypal English gentleman, Mr. Darcy, for goodness sake, has just relinquished his British citizenship. He's now an Italian. Colin Firth, Harry from the Kingsman movies, he's an Italian because he's unhappy with Brexit. Well, do you know what, Mr. Firth? We're unhappy with you. You want to leave? Leave. You already own a French chateau that you live in most of the year anyway. Don't pretend to us that you're British. You're anti-British. You're anti-democratic. But because of the democracy that we still have, you are allowed to leave this country. The alternative is when you cannot leave. And it's amazing how that basically only happens. In fact, I use the word basically. It only happens in repressive, socialist, communist states. Every other country in the world, you can leave if you want. If you've got the money, you can leave. And even if you don't have the money, you can just stick your thumb out and hitch a ride, because it doesn't cost much to get a passport. But you can't get a passport in a repressive, communist, socialist regime. And that, Colin Firth, is what you are remaining in the EU. By the time you die, Colin Firth, the EU will be a repressive, communist, socialist regime. Mark my words. Talking of which, Theresa May gave a big speech in Firenze, Italia. And for those who aren't as eloquent in foreign languages as I obviously am, that meant Florence in Italy. You do know why you're listening to this show. It's about free market capitalism. It's about ripping apart the nonsense that Corbyn and McDonnell and Diane Abbott and all those cronies, interesting use of the word crony, are giving in Brighton right now. But by the way, Mr. Corbyn, the last time your friends were in Brighton, Thatcher and her crowd were blown up by them. They people make me sick. Their posters are all about, we're here for the many. And yet, they've got massive 12-foot walls to get in. You've got Koonsberg of the BBC, who has to have a bodyguard because of the threats that the socialists have given her. You don't hear the BBC talking about it much, though, do you? But if the pound goes down 1%, oh, Brexit's done this, they're annihilating us every 5 minutes. It should be on the front pages, it should be on the headlines every 5 minutes that Koonsberg, the political editor of the BBC, needs a bodyguard at the Labour Party conference. And there are millions of idiots who believe those guys are for equality and freedom. Talking of Theresa May, so she's just handed Barnier, Juncker, a lot. She's handed the EU bureaucrats for what? Why did she do it? Why on earth would she give them those things? Why would she give them 2-year extension? And she says around 2 years. So that could be 3 or 4 years. And even if it is only 2 years, that means it's 5 years after the vote. When in fact, if we had invoked Article 50 within weeks of the referendum, then 2 years would have been next year, and we could have left the EU by the summer or autumn of next year. Instead of it being the autumn of 2018, it's now March of 2021, or it could be December of 2021, which is around 2 years. Why has she given that extension? Why is she promising to give them still lots of money in the interim period? I said it last week. It was likely to be 2 years. I said 2 or 3 months ago, listen back, listener, that it's likely that the day that Juncker came to meet her in 10 Downing Street, she agreed a deal of £20 billion or euros. And all the nonsense since, will there be a deal? Will there be a payment? I think it was done that day. I think it's pretty darn obvious now. I said it. And you have to wonder how she really feels about Brexit. Because if she really was a Brexiter, we'd be leaving in March 2019. And it seems to me that the civil service is running the show. And, I've heard from a friend in Down Under. He went to see the head of the British Chambers of Commerce. And this guy said, and by the way, this guy's a Remainer, who now is saying, well, let's just get on with it. Good for him at least for being pragmatic. This guy said that the civil service didn't start doing anything on Brexit till a couple of months ago. I believe him. It's that frightening. The civil service is doing whatever it can to reverse this, to reverse the will of the people. Because the civil service and their Oxford, Cambridge degrees, they think they're better than 17.5 million people. They think they're smarter. That is the font of communism and socialism. They think, they say that they can do it better. What they actually know from history is that they can't do it better, but they can line their own pockets much better. The civil service have no idea how to get this done by March 19. That is the reason why we have an extension, because the politicians are beholden to the civil servants. How ugly is that? They've no idea what they're doing. They've tried every other way of usurping the will of the people. And they're targeting to start the process in March 19. They never had any intention of ending it in March 19. The public sector, as per usual, is messing it all up for the rest of us. She says, we're leaving the EU, we're leaving the ECJ, we're leaving the single market. Well, all I can say is, if she reneges on any of that, she'll be the worst Prime Minister ever. In other words, it has to happen before the next general election, or before she gets ousted if they decide to try and oust her. If she gets this all done, as she said in Florence last week, by 2021, then an extra 2 years will stop us, the people of Britain, benefiting from being out of the single market, being out of the tariffs 2 years late. But it'll be a relatively small price to pay if it does actually happen before the next general election and before she gets ousted. If it happens in 2021, so be it. I won't bother that much. But what the hell are Farage and Rees-Mogg's problem? If it's only 2 years, and let's be clear here, Rees-Mogg has said nothing other than it's an extra 2 years. Farage has said that she's going totally against the will of the people. Well, it seems to me both of them are politicking. If we get what she said we'll get before the next general election and or before she gets ousted. On verra, let's see. Who else gave a speech? It's going to be a great speech. It's going to be a really great speech. I can tell you, it's going to be great. I think you've got who it was. He gave a great speech to the United Nations Assembly. I loved it. He told the fascist Arabs where to go. Then I saw Raif Badawi's wife spoke to the Saudis at the United Nations. Do you not know who Raif Badawi is? The guy wrote a blog wanting a bit more freedom in the Kingdom of Saudi Arabia, just about the most repressive, fascist, anti-democratic, racist, warmongering thugs on the planet, and of course the biggest terrorist funders. And because of this blog, he was put into jail for life and sentenced to 1,000 lashes. These guys are still in medieval times. And I loved it when his wife spoke directly to the Saudi foreign minister or the ambassador to the UN. Trump, good on you. Except for the fact, Donald, you're good with words, but you've actually achieved nothing, and you've done everything but drain the swamp. You've got rid of everyone who might have had something in draining the swamp. Now, I know that changes of administrations never achieve anything in the first year, but you've achieved a lot in terms of getting rid of the people who could help you make change. So, you're good with words, but you're rubbish with actions. Have you seen that the Imam of Peace, as he calls himself in Australia, I can't off the top of my head tell you his name, but I follow this guy on Twitter, Imam of Peace. Make sure you get the Australian version. The guy's amazing. He absolutely gets what we get. I'll give you an idea. Tommy Robinson loves this guy. But this guy is not a racist. He's not just as bad as all the... No, on the contrary, he's a free marketer, a freedom fighter, and he gets the medieval attitudes and behaviours and actions of Islam and Islamists. He totally gets it. And he is an absolute incredible scholar of the Quran. He's an imam. And he is spreading peace and tolerance and getting on with everyone and living and let live. And he is totally against the medieval barbarism of Islamism. You want to check this guy out. He's amazing. Now, last week I opened with George W. Bush in a TV interview talking about bailing out the elite and suspending free market capitalism. What I didn't do was go on and discuss with you what bailing out the elite and suspending free market capitalism means. It means that, without a shadow of a doubt, it cut short the recession in 2008, early 2009. And it gave Obama the opportunity to let through massive bank bailouts. I mean, Bush was talking about bailing out the car manufacturers. Obama then, with TARP, bailed out the banks. Then quantitative easing, zero interest rates. And of course, when, for example, you slash the interest rate in America from 6% to 0, almost immediately, of course that's going to have a positive effect on the economy. Of course it is. Short term. To which you may say, well, so what's the problem, Jonathan? Can I just say, as I should say at the top of the show, my name's Jonathan Davis. This is Monday, the 25th of September. I'm recording this show at around about noon. Well, the problem is that we've now had for nearly a decade large numbers of massive zombie companies which are in intensive care and simply shouldn't have been allowed to be resuscitated. They should have been let go bust. And of course, that would have deepened the recession. It would have caused a huge depression, which would have lasted, I guesstimate, 12, 18, maybe 24 months. And unemployment would have soared. The stock market would have been annihilated, and the dollar would have absolutely continued soaring, which it did in 2008. So, as I have said on the radio and TV, probably a dozen times, no more, a dozen and a half times over the last nearly 10 years. The result would have been that businesses would have had to have slashed the prices of their goods and services. So anyone who still wanted to buy would have been able to buy much more cheaply. That would have got trade moving again. And with the dollar going through the stratosphere, the price of commodities, particularly oil, base metals like copper, iron ore, food produce, the costs of all these things would have absolutely collapsed. Again, reducing the price to consumers and businesses. The cost of labour would have fallen, and it wouldn't have affected the standard of living of people selling their labour, because the cost of their living would have plummeted. In reality, their standard of living would have risen. You know the people who would have lost out? The blooming elite, the bankers, the heads of the big corporations, all their stock options. These are the people who would have lost out. We would have created more equality in society. And because everything would have been so much cheaper, America would have become an amazing manufacturing powerhouse, exporting incredibly more competitive, exporting to the rest of the world. And that would have been the same for Britain if we hadn't done the same as America. Britain would have become one of the powerhouses of the world. Instead, we became a banking powerhouse, an estate agent's powerhouse, a building society powerhouse. And we've just had nearly 10 years of same old, and lackluster growth. And although unemployment is low, the reality is everyone's on minimum wages. Or you've got millions of folk now self-employed working from their back bedroom who used to be on very high salaries, but they were chucked out their jobs anyway. And as I've said before, Keynes' definition of a depression is an extended period of slow or no growth. Really, that simple. We have now had an extended period of slow or no growth. We are in an economic depression. And we will be in an economic depression for another 20 years on the basis that we simply follow what's happened to Japan since 1989 to date. They're now nearly 30 years in economic depression. Now, the only difference that might well happen between Japan and the West in the current depression is Japan went into a deflationary depression. It's had zero interest rates for basically ever now. It's had huge unemployment, much of it hidden because they don't register, but they stay in their bedrooms at their parents' flats, and they twiddle their thumbs or whatever else they do. You've got vast numbers of folk living in parks, literally, and you've had a vast increase in numbers of suicides. They've had a house price crash. House prices fell 60% more in Tokyo because it had gone up more. The stock market collapsed 80%, and so on and so on. Now, we may turn Japanese. And although interest rates generally are, you can pretty well say they are rising, we may find that the economy can't handle higher rates. So we go back down to zero again. In other words, we are in a deflationary depression. And we'll see the stock market crash, collapse. We'll see house prices collapse. We'll see huge unemployment, underemployment, and so on. Of course, you'll also see the price of goods and services collapse as well, which will be nice, because our currency will go through the stratosphere. I've been saying to clients for the past year and a half that I'm seeing inflation come back into the system. I'm seeing it everywhere. And I'm now at the point where it seems likely to me that we're going to have higher and higher inflation, at least for the next year. And that's being reflected in asset prices all over the show, whether it's oil, base metals, agricultural produce, emerging market share prices. There's no question we have inflation, and it seems it's there for at least the next year. And the next recession that we have could be an inflationary recession caused by, I don't know, $100 oil. It's possible. It could be simply caused by we got too enthusiastic too quickly. And you know, you probably heard it here first, folks. Whereas for the last 40 odd years, whenever we've had an economic slowdown, government bonds have always risen in price, and therefore market interest rates have always fallen. It's entirely possible that because everyone assumes that's what's going to happen in the next recession, the reality is, and I put a pretty fair probability on this, we could actually see government bond yields rise, which means government bond prices fall, thus collapsing the stock market, creating a recession. Which means that we will have rising inflation from last year for 10 or 20 years. And with rising inflation, you get rising interest rates. Who's heard of Hugh Hendry? Very interesting guy. Hedge fund manager. Co-founded and chief investment officer of the Eclectica company, Inc., whatever they're called. And the Eclectica fund, hedge fund, was the fund that he'd been doing since, I don't know, something like 2002 or something like that. And he came to general prominence just before that, when he was the European fund manager at Odey Asset Management, ODEY. And in the run-up to the dot-com bust, basically European funds, unit trusts, OICs, mutual funds, whatever you call them, they were all basically tech funds. They're all dot-com. And what Hugh did, and as Mike O'Kane would say, not many people know this, in just before the collapse of dot-com, he went heavily to cash. So come the year 2000, in the league table, his fund was not just a mile above number 2, it was 1,000 miles above number 2. And of course, the first I got to hear about it was when I read the trade press and the Investment Management Association, all the blue bloods in their pinstripes and nonsense. They were up in arms. It's outrageous. He was running an equity long-only fund. How could he go to cash? And his answer was sweet. Because I'm in the business of making my investors money. Not just so that I can be in a particular sector that you, the Investment Management Association, have said that I should be in. My raison d'etre, he used to say, is to make people money. And he made people, investors, money by the barrelful in the European Equity Fund. And then he didn't lose it. That's the thing. He came to general prominence in the 2008 bust with the Eclectica Fund in the month of, or I can't remember, maybe the month after the Lehman's and AIG bust. His fund made 40 or 50% and made 40% for the year. Sensational. Incidentally, my own clients, not a single one lost more than a few pence. Most were up a little in 2008 during the biggest economic and financial collapse in history. How did I do it? Well, 40% of client funds were in cash when it was still paying 5%. And because we didn't do too badly at all on the other 60%, as I say, basically clients were mostly slightly up for the year. I think a couple lost pennies. So it was a good year. Now, Hugh Hendry then took in lots and lots of money to the Eclectica Fund for obvious reasons. It was basically a hedge fund where he tried to invest in totally uncorrelated assets, therefore bring about true diversification and basically get rid of capital loss. And it's true, he basically didn't lose money over the next X years. He didn't make much either. I mean, literally, it was like 2 or 3% a year. One year he might make 8%, another year he might lose 5%. He made very small amounts of money. And he closed up shop last week. Why? Because he didn't make anyone any money. And everyone just took their money away. Indeed, my own sad history is that he did actually develop a retail fund, the Absolute Macro Fund, which was based on the same thinking as the Eclectica hedge fund. And I put a substantial amount of my clients' money into it. And over the next 3 years, he lost my clients 15% of what we put in. It was very, very, very painful. Now, as it happens, if I'd kept my clients in for literally another 2 months, those 15% losses would have been 5% losses because he made, in effect, 10% over the next 2 months. I wasn't to know that. For the last year that I was there for 3 years, I was saying, what the hell is going on here? An absolute return fund that should be making me at least a few percent a year, surely, had actually lost me by the end of my second year 10% or so, and then in the next year lost me another 5%. I thought, I can't continue doing this. If I'd waited 2 months, but how was I supposed to know that? And the answer is, I couldn't possibly. All I'd known is, month after month, I was losing clients' money on that holding. So, he shut up shop last week. I don't quite know what the current position is. But what's interesting about Hugh Hendry is a supremely intelligent guy. Oh my God. And so amazing to listen to. Even though I didn't have any money with him, if I saw there was an interview going on in the interweb, I'd home in it and I'd listen, or indeed sometimes I'd have the chance to watch him being interviewed. And he always had brilliant ideas. But he never made anyone any money. And if only he'd looked at a chart and looked at the trend in various assets, he'd have seen what to go into and what to stay away from. Instead, he was so supremely intelligent, he was always thinking up incredibly esoteric ways of not losing money. So he didn't lose money, and he didn't make anyone any money. Hugh, I do wish you the best, but all I can say to you is, kiss. Keep it short and simple. Well, the great free marketer Sadiq Khan, London Mayor, Labour. London's open for business. Is that right, Mr. Khan? Who used to be a lawyer defending ISIS terrorists. So I understand. That could be an error, but that's what I've seen all over Twitter sphere. So don't come at me. Go after the guys in Twitter. He's just shut down Uber in London. From the 30th of September, a week from now, Uber loses its availability to trade. Well, you know, if this isn't communism and cronyism to help his mates in the black cabs, I don't know what is. And Katie Hopkins, the great independent thinker, free marketer, liberal with a capital L, as in a 19th century liberal, free marketer, capitalist, she loves it. She's delighted that Uber will no longer be providing a service of transportation in the capital. Katie, get your head examined. Do you think, listener, the black cabs would accept credit cards and debit cards if it weren't for Uber? Do you think they'd quote a price if it weren't for Uber? Do you think they'd take you south of the river now if it weren't for Uber? Sorry, mate, I don't go down south of the river. Remember the old days? No, that's competition. That's free market capitalism for the benefit of the people, for the benefit of consumers, not for the benefit of the elitist taxi hackney cabs. You know, to be able to drive a hackney cab, or whatever they call it, a licensed cab in New York City, you had to buy one of these medallions. And these medallions got up to $1 million. To drive a cab, you had to own a medallion, and it was costing $1 million. Of course, they've now plummeted in price because of Uber. They now cost $160,000. So a lot of people, of course, have gone bankrupt. More fools them. They were cronies. And now that it's $160,000, you can actually afford to be a cab driver in New York. Whereas before, it was only the very rich who could buy the medallions, who would then lease it to you for an extortionate price, and they owned you if you leased it from them. Because you could not run your own business. You had to work all the hours that God sends. You were a slave to the rich medallion owner. But now that it's $160,000, you can afford to buy one and be your own boss. Listener, this is capitalism. If only we had it! 43 minutes. Economics. People tell me that the Chinese debt is so ridiculous, China's going to fall apart. I used to believe that as well. And then I woke up. What did I wake up to? I woke up to the Chinese stock market. I woke up to Alibaba, JD.com, Tencent, Baidu. I woke up to the fact that these stocks are just going up. And they're going up because of what the consumer in China is doing. They keep going up because of One Belt, One Road. To hell with the amount of debt in China. Indeed, it's now 268% of GDP at the end of Q2, according to JP Morgan. Open up the pinned tweet of the show and scroll down and see some charts and pictures that I'm posting there. Actually, it was 269% in Q1. Slightly down. The point is, it's not 400 or 500%, which is the amount of debt you've got in the UK and in some of the parts of the EU. 400 or 500% is the amount of debt in our economy. whether it's corporate, household, or government. China can go a long, long way raising its debt before that country collapses. I could be wrong. Now, interest rates are going up, listener. The US 2-year Treasury yield ended last week at an 8-year high. It hasn't been higher since 2008, before it all hit the fan. And we've seen the 2-year rate rise since 2011, when it was down to 0.15%. It's now 1.5%. The US borrows over a 2-year period at 1.5%. 6 years ago, it was borrowing at practically nothing. And the odds of another Federal Reserve interest rate hike is now, this year, is now at 73%, according to the market, by December this year. But at the beginning of last week, it was 58%. The market was pricing in another interest rate hike. It's now 73%. Looking at the UK, various members of the Monetary Policy Committee, and in particular Mark Carney, have come out and said, we're going to raise interest rates. You can disbelieve them if you want. I'm listening to them this time. The market has now got a Bank of England rate hike by Christmas at in excess of 70%. The market, listen to the market. I'm not listening to carnage. I'm not listening to ivory tower merchants. I'm listening to what the market is actually pricing in. The market, remember, the chart is the sum total of market knowledge, aka Mr. Market. And I listen to Mr. Market. I read the charts. Interesting things happening in China. In Chongqing, Nanning, Guangxi. No, Nanning is in Guangxi. Nanchang. And Changsha. And there's a sixth one, which I don't actually know off the top of my head. Property owners in these economic areas, they've just had a bombshell. They've just been told that anyone buying a new home there, and think about the miles and miles and miles of skyscrapers of flat after flats after flats after flats, bought by so-called investors. Under new rules, they can't resell those properties for at least 3 years. And indeed, in one of the areas, it's 5 years. This is coming from the centre. They're trying to slow down all this property development and speculation. And why would they be doing that? Because they know that there are problems. I'll tell you something though. Do you think they come out with these rules before the Communist Party elite sold all their properties? You're dead right. They waited till that. Now, this is also in advance of the November the 19th Party Congress. I think it's every 5 years. The leadership is seeking to maintain stability up until and through the Congress, which I think lasts about a week. And they need that stability so that President Xi can get through all the measures that he wants to get through, which basically means getting in place his favourite people and making him basically the supreme leader. Chairman Mao had nothing on this guy. Totalitarian regime, absolutely. But one belt, one road, no question. Rise of the consumer, no question. Don't fight it. I'm really excited about the Greek stock market, particularly the Greek banks. The Greek index up 100% in the last year. It seems to me it's very likely started a multi-year massive bull market. You know, within 5 years, expect Greece to be the economic tiger of the European continent. And again, it's all because of One Belt, One Road. Greece is going to be the entrance of all Chinese goods and tourism into the EU. I got an email from a listener. Email me anytime you want. jd@theboomsandbusshow.com. Email me. If it's about markets, probably best do it via Twitter, at boomsbustshow, at boomsbustshow. Why? Because then everyone gets to see how I'm answering your question. Of course, if it's personal, then sure, email me. Be delighted to hear from you. He wanted to get involved in oil because of the inflation that's happening. And, I'm not giving advice. I suggested he might want to look at global energy stocks. They seem to be hot to trot. You can access via exchange-traded funds, unit trusts, or indeed individual stocks. They seem very hot to trot for me on a multi-year basis. And indeed, if you look at Boom's Bus Show, you'll see the actual answers that I gave him. And indeed, if you're not following me there, please do so. I think you'll get something from it. Similarly, I've had a number of people contact me this week, sending me an email or direct messaging me at Boom's Bus Show. Send me an email at jd@theboomsandbusshow.com because they want to receive the Booms and Bus report. Just sign up, cost you nothing. If it's not for you, just immediately unsubscribe. And by the way, your details will never leave this office. Gold, it's been weakening as I said it would. The yen's now up to 110 against the dollar, 112 against the dollar. And it may be that $12.70 dollars for gold is the bottom. I can certainly see a bounce there. I think actually it can go lower, but $12.70 is a very good purchase on a medium term view. Quotes of the week. I've got a couple of minutes left, and this actually comes from a very interesting blog called Occam All Ye Doubtful, OCCAM, and he wrote, "We should have equal opportunities. We should have equal outcomes. One of these two statements represents a desire to help others. The other is fascism." And listener, if you haven't got it, the fascism is we should have equal outcomes. And in the last few minutes, I want to spend talking about this quote, sheer genius. A democracy will continue to exist up until the time that voters discover they can vote themselves generous gifts from the public treasury. From that moment on, the majority always votes for the candidates who promise the most benefits from the public treasury, with the result that every democracy will finally collapse due to loose fiscal policy, which is always followed by a dictatorship. My goodness me, didn't he get it right? When do you think that was written? 50 years ago? 100 years ago? 200 years ago? It was written by Alexis de Tocqueville in the year 1835, nearly 200 years ago. My goodness, didn't he get that spot on? What a genius! Because that is exactly what we have 200 years later. And I guess he's French with a name like de Tocqueville. And that reminded me immediately of the French phrase plus ça change, which when you translate it, it means the more things change, the more they stay the same. Things change, but people don't. It's never different. People's drives, fears, emotions, etc. never change between the generations and centuries. And if we don't watch out, if we don't spread the word of free market capitalism, which means freedom, we are going to be in a totalitarian regime. We're going to be in dictatorship by the time your grandkids are adults. Spread the word. Retweet the Booms and Bust Show. The final quote comes from one of the most successful financial markets traders ever. And it goes to the heart of whether or not you care about what does the Economist say, what does the FT say, what does the Wall Street Journal say, what does this pundit say, what does this guy on Twitter say, what does CNBC say, or do you look at the charts and try to understand what Mr. Market is actually doing, as opposed to, as they say, what is the narrative? He said this when I guess he was probably in his early 60s. I see the younger generation hampered by the need to understand and rationalize why something should go up or down. Usually, by the time that becomes self-evident, the move is already over. When I got into the business, there was so little information on fundamentals, and what little information one could get was largely imperfect. We learned just to go with the chart. Why work when Mr. Market can do it for you? These days, there are many more deep intellectuals in the business, and that, coupled with the explosion of information on the internet, creates the illusion that there is an explanation for everything and that the primary task is simply to find that explanation. And that was Paul Tudor Jones just before the great financial recession in July 2008. And he's saying to us, the narrative can be whatever it is, but by the time you know what someone's narrative is, the move has already ended. And in any case, how can you possibly know if the narrative is accurate? I can tell you that a year after an event, there's still debate as to what happened. But what we know happened was the price did X, whatever it was. So that is why I trust Mr. Market much more, 100 times more, than whatever anyone is saying is what they think is going on. And that, listener, is how I invest money. Listener, I've had a blast. I'll see you next week.